I want to talk to you today about some alternatives to MYGAs. And a MYGA, for those of you who don't know, stands for Multi-Year Guarantee Annuity. That's a little bit different than a straight fixed annuity. Your fixed deferred annuities are not indexed at all. They have a declared fixed rate, but that rate can change at the end of each annual reset period. Some of them have a base rate it can't go below, but it can in fact change. Where MYGA, by definition and in the name, is multi-year guaranteed, meaning that rate is guaranteed for the life of the contract. Now, a few of them will have a bonus interest rate on the very first year, but you want to look at the guaranteed yield to surrender in that case. With the Fed raising rates the way they are, and with everything sort of in flux and the market being a bit volatile, a lot of our clients are seeking the safety of that multi-year guarantee so that they know what their yield will be at the end with no questions about what the market's going to do or anything else. And a MYGA is a great alternative to a CD at the bank or a bond or something like that, because in a lot of cases, it will pay more. Again, that might depend on the amount of premium that's put in, the relationship they have with the banker, et cetera. But right now, we're seeing some very competitive rates for what you might call a safe money place. Now, mind you, fixed indexed annuities are also safe money places because the principal is guaranteed. They have many of these with no built-in fees as well, so the principal is not going to get eroded by some fee in there if the index doesn't perform. One of the things that you might consider as your clients are talking to you about MYGAs and wanting something with a guarantee is showing them the advantages to a fixed indexed annuity. And the way I would position that right now is that a lot of these fixed indexed annuities have very high fixed rates. Now, again, that rate's only guaranteed for the first year. Most of them have a minimum of around 1%, some even less for the fixed account. So it's not guaranteed for the next year, let alone the life of the product. But the way I would position that is with the volatility of the market and not knowing what it's going to do, there's a good chance that after a year, things will stable back out. And if they're in a multi-year guarantee situation, the surrender charges make it pretty cost prohibitive to get out of one of those MYGA products and into something with an index that might generate a better return than the 4 or 5% that they're guaranteed. In this case, if you give them a fixed indexed annuity, you can show them how they can get a good fixed rate for the first year for all, or maybe just some of the premium. And maybe they want to, quote unquote, roll the dice with the rest and put it in one of the indexes. Now, I brought this screen up from Annuity Rate Watch just to show you that we have, you'll take a look right here, with the restrictions I've put in, still 127 products that have at least a 4% or greater fixed rate that are 7 years or less in surrender charge. Most of these MYGAs are shorter term. So if you bump this to 10, you'll get even more products. And I chose the commissions that are not fee-based, meaning these are fixed products. They're not variable, and you don't have to have a securities license to sell. So as you can see, there's a wonderful amount of choices out there to get them a great fixed rate for the first year for a fairly short period of time without locking them into that multi-year situation where they're only guaranteed a certain amount. Now, if they have a good sum of money, they might want to put some into a MYGA, but you maybe would talk to them about putting some money into one of these shorter term products that offers them a little bit better rate on the caps for the S&P 500 or some other hybrid index. If you'll look here on this annual point-to-point cap, this is selected for the S&P 500. So they can be guaranteed a fixed rate for the portion that goes in there, and they can get an annual point-to-point cap of 14.5, which is just nuts. Will the market do that much? Maybe not, but they could probably capture a lot of that gain. And as you scroll down, we have a lot of product here that has very low minimum premiums. Some of these are banded and are higher, but I just want you to be thinking in a way of not talking them out of wanting that fixed rate, because with the volatility right now, you're probably not going to talk them out of that. But if you can show them how they can get a really good fixed rate on some or all of their money for that first year, and have the option after the first anniversary to move it out of that fixed rate, maybe they leave it there if the renewal's good, but maybe they want to try one of the indexes to give themselves at least the opportunity to get more than that. This is good for you and for the client. Many of these products have better liquidity. Some of them have a lot of features that your MYGA product is not going to have. Like a lot of MYGA products with the really good rates don't have full account value on death, where most of these do. A lot of these will also have optional riders for either a death benefit or an income rider or some kind of enhancement. You're just not going to have even the option to do that with the MYGA product. So at the end of the day, if they're dead set on a MYGA, there's nothing you can do about that. But if you can talk to them and explain to them the advantages of having some variety, some blending of their allocations to help offset some of that market risk, but also give them an opportunity for more gain, you might have a good chance at selling them one of these 5 or 7 year products. And again, if they're willing to go at least 10 years, you can even get a higher fixed rate than some of these rates are showing. So just a thought, just a sales idea. You're not going to talk everybody out of a MYGA, but you should present them the opportunity to do a little bit better with their money if they can. There's nothing wrong with wanting a good fixed rate. And right now, MYGA or not, we have some fantastic fixed rates. If you have any questions about products, any specific illustration you would like ran, please reach out. You can call me at 501-262-9029. Feel free to shoot me a text on that number or send me an email. More than happy to run you any type of illustration that you need given a certain case. You can send over your fact finder. That's even better. And then I can even put together some verbiage about, based on their profile, why an indexed annuity may or may not be better for them than a MYGA product, depending on their goals, wants, and needs. We do appreciate your business. I love working with each and every one of you. And if you want more videos or a video about a certain topic, feel free to put that in an email to myself or John as well. Thank you so much.